All right, welcome back. You're still watching Closing Trades right here on ET. Now, Bundeep Singh.
I think we want a percent lower just before we go to the European phone, or just see what we've done for our markets, because I don't think in the last few minutes, I think we've just perked up in trade. So just to pull that point through, 4720 for the Nifty, 30 points higher. So some bit of an uptick coming in the last few minutes.
Important to assess what's happening in the rest of Europe and the market breadth. That's for you at the advanced decline ratio. Bundeep Singh Rangar, who's the chairman of IndusView, joins us with his perspective on trade. As we close out the year, Bundeep, what is it that you're recommending clients? What's the broad view on the market and asset classes as a whole?
Hi, good morning. It's a tough one, right? The Eurozone crisis still isn't resolved, and I think as long as that's looming in the backdrop, it's going to be really hard to make all singing, all dancing predictions about which ones to go after. Having said that, I think we're going to see certainly a rebound in some ways of the financial stocks. I think the financial services sector has taken a really hard hitting the last 12 to 24 months, and even in India they've come down recently. So I think that's one that will be potentially one to rally up once they solve this critical crisis that's still affecting Europe. And on the back of that, I think you will also look at certain other sectors like real estate that have also been fairly deflated. That could be ones to look out for in the midterm.
Bundeep, just wondering, it's fairly certain that the Eurozone is headed into a recession. The question mark really remains that for how long does this period last? Because we may not be necessarily in a kind of a correction which will take the indices down another 50%, but time-wise, it might be a really long and protracted correction. What's your view?
I agree. I think this is not a dip in the market. I think this is there's been a corrosion on the markets for the past few years now, really, and ever since 2008, we really haven't come out of it. So if it's already been, now the fourth year that we're into it, I don't think it's going to rebound any less than that. It's like a 3 to 5 year horizon for the markets, at least in Europe, to be anywhere near they were before the 2008 levels.
Okay. And the other question, Bundeep, really is that, 6 months ago, while everybody was talking about how the US and the Eurozone might be in trouble and the emerging market pack might be the pack to turn to, somehow there has been a sudden turn of events also with what's happening with China or India for that matter as well. Talking about India in particular, what's the sense really by virtue of what is considered to be a widely agreed upon policy paralysis and the resultant impact on the flows thereof?
I think India is affected in general. One, of course, you see, you look at the commodity sales worldwide, and that's definitely come down, and that's in the back of probably more China than India. But India's been affected in part also by the corruption scandals and the inability of the government to get itself out of that and come with a very strong message that not only shows an anti-corruption policy, but also a very strong political will that can shape the policies economically the way they want. The kind of backpedaling on the opening of the retail sector was one thing the investors overseas did not like at all, because that makes it very hard to predict what the government can do, and therefore, uncertainty in the market is not liked by investors. So I think the perception is still one where, yes, India's 70% domestic focus, but it's not got that kind of political oomph that's needed to get it out of a slow growth trajectory. And on top of that, you take the rupee where it is right now, which is dropped, and of course you've got slower growth in Europe and America that fuels some of the exports, especially in the IT sector. It's, there's no rosy picture for India the way it was about a year and a half, 2 years ago, where, yes, long-term fundamentals are still good, but that time you had the backup of, policies that were working, a government that had a majority and that could make executive decisions. Now there's much more sense of let's just be more careful because we're not quite sure what's going to win out there, right?
Okay. Thanks a lot for that, Bundeep. Thanks a lot for joining us today. Ashwini, I want to come back to you with a pseudo-fundamental question, so to